Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I'll scroll through the comment section. I like to give, answer some of your guys' questions that you leave in the comment sections and make sure that you guys have the information, the correct information to make well-educated decisions. I went on vacation. I was talking to some relatives, brother-in-laws and stuff like that. And the brother-in-law made the comment that home affordability depends on interest rates. And I responded with, that's not what history says. And I'm going to show you a chart in history and read this question here because it is a topic that I had wrong for many years. I always thought that lower interest rates would push home prices higher. That is false. That's a false statement. I don't want people to propagate this because it is false. I don't want them to make decisions based off of that narrative, because that narrative, that sequence, the lower interest rates push home prices higher is not a true statement by a long shot. Now the question here is inventory. This is the statement. It's this one right here. Inventory will come online once interest rates begin to rise. I don't understand how you can have higher home prices and higher mortgage rates grouped together in one of the charts you have shown in less hurried decisions and frenzy by year end of 2022. These are usually complete opposites. Would love to hear your thoughts. So they are not connected. Inventory will not necessarily go up because of rising interest rates. Rising interest rates does affect the affordability for people buying homes. What happens, though, is usually the economy gets better in an increasing interest rate environment. It's inflationary. That's why interest rates go up, is because we have inflation. But during inflationary periods, rent prices go up. Incomes go up. Unemployment goes down sometimes, depending on the conditions. But what happens is money seeks hard assets during that time frame. So people who do have money, and if rents are increasing and you have a tight market in the housing market, that's what's driving this. The tightness in supply and demand of the housing market is going to drive prices higher. It's going to drive rent higher. It's going to drive all these things, all these knock-on effects to go up. Now, I'm going to show you a chart here that I've got. This is the housing index. You'll lose me for a second, and I'll zoom in here. This is the housing index versus interest rates over time. And this is the United States. The home price index is in the green. The long rates is in the, we'll call it the orange reddish type phase here. The largest boom in housing happened from 42 all the way to about just before 1990, 1989, 1990, somewhere in that range. Interest rates, the long rate, which is basically mortgage rates, went up the entire time almost of this boom. It just went down at the last little bit of it. So what this chart is telling you is that interest rates go up they went up during the largest housing boom in the United States history. Now, interest rates were going up in the 2000s as well. And it was going up and up and up with interest rates going up. I think that the narrative that interest rates have to go down for home prices to go up is completely false. What you're going to see is you're going to see inflation come in. You're going to see interest rates go up, and people are going to get paid more money. And that money is going to seek hard assets. It's going to seek safety in real estate. And if rent prices start to go crazy, people are going to say, why am I renting? I'm just going to go buy a house. And that's what usually happens. So what I think is we're going to see home prices go up along with interest rates because the supply-demand balance is so jacked up. That's what happened in the 70s, one of the largest real estate booms ever in America. The 70s is this time frame from here to all the way up to 1990, this big bull market inside of this increasing interest rate environment, which was a massive rate increase. Massive rate increase. This is not a small little move. This is like 5% to 20%. And house prices went up the entire time. So be careful what you think you know to be true. It is not true. The statement that interest rates and home prices go in opposite directions. Interest rates down, home prices up. That's not true. So take that idea, throw it out. And I know a lot of people on YouTube, oh, if interest rates go up, it's not the case. That's not history. We had the largest United States real estate boom in a massive increasing interest rate environment. That is a fact. That is history. So when you say interest rates going up is going to affect home prices, and push them down or increase inventory, that isn't what we've seen in the past. That is a false statement. Massively false. I just want to get that across. And if you're basing decisions based off that, be careful. That's all I'm going to say. And what I think is coming is higher interest rates. And I don't think they're going to be able to hold them down. If they hold them down, we're going to get massive negative rates. And I think you're going to see just huge moves in commodities and gold and silver. That's what I think is going to happen if they're successful at holding rates down. If you guys like this content, please give me a thumbs up. Thanks for listening. This is Finding Value.